morning, traders. Welcome back to the Everyday Growth Advisors webinar series. I hope you guys are having a great morning. Welcome. Today is gonna be a technical analysis live stream. I hope you guys are ready. This is gonna be something different. So we're finally kind of diving into the concepts of technical analysis here. For the past weeks, we have been kind of covering a whole lot of educational material on fundamentals. We did a little bit of technicals, but now we're really starting to get into this stuff, and I feel like, you know, we are ready to tackle on some important stuff with regards to patterns, you know, how to spot them. Now, you know, there is a minor caveat about this live stream today. All right, everything that I'm about to teach you right now, it can't be learned in one session. All right, realistically speaking, and I don't want to completely destroy your hopes, but I want to be realistic with you guys. Technical analysis is a practice that is best done over a long period of time, which is to say it takes a long time for you to understand the market moves, the way that things go, you know, and especially, you know, and specifically the patterns that arise, and also how to draw them. Okay, but with all things said, it all boils down to three main patterns, right? There is a uptrend, there is a sideways trend, and there is a downtrend. All right, and in these three trends, you can find all the patterns that you're looking for. All right, basically, with any trend that you see, you have to first spot two major things, right? If it's a uptrend, then it's got to have a higher high and a higher low. If it's a downtrend, then it's got to have lower highs and lower lows, right? These are the two confirmations that you need for either this or this, right? And so that is your building block on how you're actually first gonna spot these patterns. All right, you got to break it down from the core. It's the basic things first. Understanding how you're gonna view it from a objective view, that you're gonna break it down. Okay, is this thing moving up? Is it moving sideways, or is it moving down? That's the first object of your observation. Okay, and remember, these are patterns. So these are things that are repeatable. They happen pretty often. And so the next thing that you need to remember is that it all also boils down to time frame, right? If you don't look at it at the right time frame, then how are you going to understand what trade is that going to be for, right? So the time frame that you choose also changes the type of pattern that you're looking at. How strong that pattern is. Is it a stronger pattern or is it a weaker pattern? If you're looking at something on a 1 minute time frame, right, the chances are that this is a weak pattern. Okay, it could be a strong pattern if you're taking a scalp trade. Okay, if you're taking a scalp trade, this might be a strong pattern, right? If you're looking on a 5 minute chart, right, then it becomes a semi-weak pattern. And this kind of a trade is usually good for a day trade, right? A day trade. And then if you look at 10 minutes or, you know, 15 minutes, and then you're looking at those kinds of patterns, this is more solid. It's a stronger pattern for a day trade, right? Stronger, okay, for a day trade. Now, above this, if you see 1 hour patterns, those are pretty strong. These are strong patterns, okay? And remember that 1 hour patterns require confirmation. And what does confirmation mean? Confirmation boils down to a couple of things, right? What is confirmation? Confirmation often means that you have volume, momentum, and a technical breakout of the said pattern. For example, if something's moving like this, and then it breaks out of the resistance, right? At this point here, there needs to be volume, okay, a momentum pushing the stock up, and it has to break out of the resistance. That will give you a good inkling that this is a confirmation. Now, the next thing is, a breakout is not all that important. What is further information is something called a retest. Oops. Retest. Okay, what does that mean? That means when something breaks out, it needs to come down and test the previous level and validate this as a new level of support. And once you have that, that gives you a better position for you to make a decision. I'm not sure why my computer is lagging, but it is, and it's very annoying. So, welcome into the stream, guys. I hope you're having a good morning. Make sure you smash the like button. Thank you for, attending the stream. Let's see here. Good morning, good morning. Hey, T, regards to Nicolas sold puts yesterday. It's in profits now. What if we close position and sell puts again? What's your thoughts? I'm not sure what you're trying to achieve there. If you already sold the puts and they're in profit, why wouldn't you let it ride further? Are you trying to lock in profit? If you're trying to lock in profit, you know you can set a stop loss, right? Okay, sorry, back to this here. So now, once you understand the concept of higher highs, higher lows, the three patterns, main patterns that occur in the market, you understand momentum, breakouts, etc., etc. But how do you go about spotting these? Well, first things first, you need to understand that candlesticks are the building blocks of these patterns, okay? So candlesticks individually build these patterns, right? So bullish candlestick patterns are usually like so. You have a bunch of these, right? If they're a single candlestick, and by the way, if you don't know about these, I have an entire video series that is dedicated to this, okay? If you go to my YouTube channel, you go under my playlists, okay? You go under active investments right here. I have done 2 videos, Beginner's Guides to Candlesticks, 1 and 2, that go over this in detail, okay? So you need to first understand these key candlestick patterns because they also play a role for the reversals, okay? And spotting them within those kinds of things, okay? And then the bearish ones and the neutral ones. Dojis, right? Spinning tops, marubuzos, stars, where you have a, kind of a fat doji on top. Like this is a morning star, and then the bearish one is the evening star, right? You have the 3 white soldiers, so you have the 3 black crows. You have bullish engulfing candles, bearish engulfing candles, tweezers, right? With long wicks usually. You need to know all of these, okay? Once you're done with that, then you can start to look at the patterns themselves, okay? Now with these patterns, you have a couple of them, all right? So bullish patterns. So let me tell you my favorite ones, and the ones that you will always see, majority of the time. You'll always end up seeing flags. You'll end up seeing pennants, symmetrical triangles, ascending triangles, and I want to say also, yeah, these also do happen, but they're less common, right? This one happens for sure, right? You can see maybe with Baba here, you can see kind of, this is more like, what kind of a pattern is this? This is more like a measured move up, right? You can see that. A buy up, consolidation, and then a break above again, right? You can see that. And then you'll have certain patterns that are like, kind of like rounded bottoms, right? And those are, ascending scallops or rounded bottoms, that's what we call them. Rising valleys, this is more like an ascending kind of a pattern with key levels where you make 3 higher highs, right? But you'll see these patterns the most commonly, all right? These ones, in my opinion, are the most common ones. Cup and handle, very common as well, okay? My favorite ones are going to be the symmetrical triangle, the ascending triangle, and then the flags or the pennants, these 2 right here. Cup and handle sometimes can be a little messy, all right? So like if you look at Baba right now, you'll see, huh, is this a cup and handle, right? Is this a cup and handle? It could be, okay? Also, remember, it depends on the time frame, right? If you look on the 15-minute, then does it look like a cup and handle? No, it starts to look like something else, right? Looks like something else. So let me get rid of these indicators first of all. So the time frame that you look at it makes it completely different, right? Look at this. This is looking more like it's looking more like a pennant, or it's looking more like a flag, right? This is what it's looking like. It's more like a flag or a pennant, right? And then you have the bullish break above it, right? Well, you can argue to say that this even pushes up here, right? You could argue to say that, but that's yet to be seen. Okay, it's yet to be seen. So understanding the patterns first are like breaking down from the fundamentals. All right. Now there are also bearish patterns, and that's basically the reverse of what you just saw, right? Bearish flags, bearish symmetrical triangles. If you break below it, pennants. If you kind of have like a wedge, but it's kind of a bearish trend, and then a measure move down. This is basically 2 consecutive waves down. Inverted cup and handle, and then a descending scallop and descending triangles. You have those as well. Reversal patterns, these are important as well. Okay, super important. Head and shoulder, very common, right? You see them very often. Tops, diamonds, and double bottoms, those are also very common. Now, obviously, you are not going to be able to spot all of these so easily. Now, the trick to this is, the first thing you got to realize is this making a higher high or a higher low, or what's going on, right? For example, here, you see this, and let's say you're trying to gauge where this is going, right? So the first thing you got to do is draw a line to where the most number of candlesticks meet, okay? And I wonder why this is not giving me what I want. Let me get the color right. Let's use black. Now, so going back here again. So the first thing you do is you find the trend line that fits the overall trend. Like, okay, for example, you didn't see all of this on the right side, right? Let's just assume that you don't see all of this on the right side. So let's say all you see is this, right? And then you're trying to figure out where this is going to go, right? Well, okay, so then we plot this and we're like, huh, okay, where is this going to go? Well, you have a descending pattern here, right? It's a descending pattern, okay? This is falling wedge or a descending triangle. There are many names for it, right? Descending triangle is this specific one, right? So the main thing here is when you're looking at this, how do you know it's a descending triangle? You know there's a support around this level here, right? This is a support, right? And so plot your support and plot your descending pattern, and then you start to see where this is aligning, okay? Now, after you figure this part out, then you know, oh, okay, look, it is a descending triangle. Now, it could continue to squeeze through here, right? But if it doesn't and it breaks out above, then you know that it's possibly going to go bullish. If it breaks below, right, then you should wait for a pullback and then enter on the pullback, right? If it breaks out above, you should wait for the pullback and then enter on the pullback here, right? So either way, you enter on the wave down or the wave up if you're bearish, right? You never want to buy when it just breaks out, right? If it just breaks out, you want to wait for the pullback and then enter. If it just breaks out, you want to wait for the pullback and then enter, right? This is your entry on both sides, okay? So the idea is always to be patient and to plot these in a very calculated manner, okay? So you can see how you can spot this right here. And then sometimes you'll see, let's see here. I'm trying to see if we can see other kinds of patterns here. If you guys, see any other patterns on any other tickers, feel free to let me know. I just want to spot the most obvious ones, right? That's important. So, for example, here, look here now, right? So now we're gonna plot this part here, right? So, okay, we have this, right? And we have this kind of a ascending kind of pattern, right? It's kind of a wedge, right? It's a wedge, and this wedge is heading higher, right? The wedge is heading higher. Okay, so if the wedge is heading higher, you can see it's kind of like, which one? Kind of like a rising wedge. You see that? Kind of like a rising wedge, right? Only thing, it's not converging. It's kind of like diverging, right? It's diverging. So this may continue to be volatile here for a while, right? It's using this top trend line and bottom trend line to make movements on the way up, right? So if you're already touching the top trend line here, and you know this has been the case for a while now, then you could expect a possible bearish reversal here, right? So you can use these trend lines to also look at how something may have a reversal in the short term, okay? Something may have a reversal in the short term here, okay? Cool. Let's see here. Good morning. When we are dealing with all-time high, how do you define your target TP? You got to use Fibonacci retreat extensions there for something that you can't view a target on. People on Discord often use Fib. Yeah, that's what I said. Where can I get these cheat sheets? Well, yeah, okay, sure. I'll post it on Twitter. No problem. I will. After the live stream, I'll post all of these on the Twitter so you can go save it. Could you put your support line at the top of the demand zone? Yeah, you could. Absolutely. 142. Wait, what? OSTK is well showing a cup. Let's see. I'm on the 15-minute here, by the way, guys. So I'm not sure what time. Make sure you also put your time frame. So now the other thing about spotting patterns, okay? You could use Heiken Aishi candles that basically cover gaps and elongate these candles to do a more smooth continuation. Because if you use regular candles, what happens is if the stock has a gap, you'll see the gaps. Now, if you're trying to do patterns, I recommend using Heiken Aishi. This type of candle is used to give you a more smoother chart and show you overall bullish or bearish movement. Okay, this is a neat little trick that I learned from an old-time trader. Now, is this a cup and handle forming? Yes, it is. Right? You can see this is basically the cup, right? And now the handle is forming, right? So this is a bullish movement. If the handle forms properly, then we'll see a extension to the upside, right? So that is a cup and handle. That's a good, well spotted cup and handle there, right? Our 29th and 30th double bottom. I'm guessing you mean on beyond. 29th and 30th of what? 29th, 30th, this here. You can, I mean, kind of, not really. Okay, couple of things. There are certain time frames that you want to use with these, okay? Now, for flags, pennants, symmetrical triangles, and all of these over here that show you price action on a intraday basis, these are good for day trades, all right? Cup and handles, I would go a bigger time frame, like 1 hour, okay? That's a better time frame. The rest of these, like flags, pennants, symmetrical triangles, measured moves, ascending patterns, right? Ascending triangle, ascending pennants, there are all those kinds of different ones. I would recommend using a 5-10 minute time frame to plot these, okay? But with cup and handle formations, for example, you want to look at it on a 1 hour time frame. The reason for this is because you want it to be a strong signal for a cup and handle, all right? If you have a cup and handle in a 5 minute, likely it's not going to be a strong signal, okay? And that's just my experience so far, all right? Now, so other very key patterns are your double top, double bottom, right? This is what it looks like. Oops. You have a neckline, and then if it breaks below the neckline, it goes bearish. And then you have a double bottom, which is like so. You have a demand zone on the bottom. With the double top, you have a supply zone on the top, right? And then you have a neckline, which is like kind of like head and shoulders, but basically the break below the neckline and consolidation below it will forfeit this pattern and send the trade the other way, right? So the break above or the break below, you see that? Consolidation and then sends it down, right? So you don't want to enter on the break, obviously. It could get rejected and go back straight up. But what you want to do is wait for the confirmation, the close of the candle, continuation candle, and then a buy up right? A buy up or a consolidation of some kind like this. And this would be your entry, right? And the same thing goes for here. If it doesn't give you an entry, let's say you go down, and you should wait for the bounce and then the entry. Sometimes you're not going to get the bounce, all right? And you know what? It is what it is. You move on, all right? Because if you don't get an entry, I would rather wait patiently for the bounce than to pay overpriced contracts, all right? You never want to get yourself into that situation. Many of you lose money because of the fact that you chase a trade upon a breakout, all right? You chase it. And it's like, for example, oh, this is the resistance. Oh, it broke out. Let me buy at the breakout. This is what majority of you do, all right? You see the volume confirmation. You see, oh my God, it's breaking out. It's made a few big candlesticks. You're like, all right, it broke out. I'm getting in. And this is where you enter, majority of you. This is your mistake, all right? This is your mistake. Because what you're actually doing is entering when the trade is at the most expensive price, all right? This is the most expensive price. You know how you go on Google Maps and you search for your favorite restaurant and you see $3 signs and you're like, well, yeah, screw that. I ain't going there. Well, you should say the same thing upon a breakout and the stock rallying, all right? If you're trying to scalp it, that's a different thing altogether. But if you're trying to day trade it and you're trying to swing this, you should absolutely not be entering there. Even if you're scalping, you shouldn't be entering that, in my opinion. But if you want to scalp, then go ahead. If you enjoy overpaying for contracts, go ahead. To each their own, right? But my way of doing things is you wait for the breakout, you wait for the bounce, you wait for it to come down. It can't continue to go up like up, right? It will go up and then come down. When it comes down and it confirms that this is the level where it's getting bought up again, right? You see buying pressure here and it's unable to break below again and starts going up again. This is your entry. That's your entry, all right? You never want to buy on the breakout. Why? What is the most expensive on the breakout? On the breakout, what is most expensive? Let's say you're buying call, you're bullish on the trend, you're buying calls. Well, everybody's buying calls here. Remember that. Everybody is buying calls, okay? So if you're buying with everybody, you're basically following the herd. All it takes is a market maker or an institution to come through, push the prices down, and then take your money with it, okay? So remember that. You got to really be careful. I appreciate you guys being here. If you are enjoying the stream so far, I'd really appreciate it if you could smash the like button. That really helps me out, you know, to help this video reach more viewers. If you can, of course, you don't have to, but, you know, it really helps me out. If we can get to like 70 likes today, that would be dope. I really wish that that's possible. So help me get to 70 likes, guys. Okay, now, head and shoulders pattern. This is very common. So there's a neckline, and by the way, head and shoulders don't need to be perfectly symmetrical, by the way, okay? Head and shoulders don't need to be perfectly symmetrical, which means it doesn't need to be like this and then like, it doesn't need to be like this and then like this and then like this. It doesn't need to be like that. It can also be like this, and then like that. It can be a slanted head and shoulders as well, all right? And it can go the other way as well, needless to say, right? Something like that. And then it could be a reverse head and shoulders. Like, for example, look here. This is not a perfect head and shoulders, right? It's slightly slanted, right? And so wherever you see that, you build a trend line, and that becomes your kind of neckline, okay? Now, the break below the neckline or above the neckline on an inverse will give you the perspective trade. Make sure that you wait for the pullback confirmation, and then you get in, okay? Credit to whoever's chart this is, by the way. I think it's this guy here, whoever this is, Arjun Limbu guy. I want to give full credits because I found this on the interwebs. So, but I'll gladly post it on Twitter for you guys so that you guys can have a look at it. Full credits to him or whoever this person is. Now, other ones that I like: rising wedges and falling wedges. Okay. Now, contrary to popular belief, these are actually inverse to what they actually are. So a rising wedge is actually a bearish position, okay? Unless, so there's a difference here. If the wedge has a pole that's associated with it, then it's bearish, all right? If the wedge is coming from a, you see, like this kind of a wedge, which is a pretty much a rising wedge, but it's coming from the bottom, then it's usually a bearish position if it breaks below it also, okay? But these wedges, a rising wedge is usually a bearish position, okay? It's a bearish movement. You usually have an uptrend of some kind and then a break below a key level of, the trend line. These key levels, all right? Now, a falling wedge, on the other hand, this is a bullish kind of a pattern, okay? So these are counterintuitive, not really that easy to spot sometimes. You have a downtrend, you have a falling wedge. This is usually bullish on the breakout, like so. Okay, and then an uptrend, you have a falling wedge. That's usually bullish on the breakout. Okay, so those are important things to take note of. So these are more of the same, rising wedge, ascending. So now, then the other one that I really like is symmetrical triangles or ascending or descending triangles. Okay, now these symmetrical triangles, ascending triangles, descending triangles. Okay, like for example here you can see this is cup and handle, and then also there is a little uptrend here, right? This is also a flag. Okay. You can see the clear downtrend, and you can pretty much see like a flagpole. Okay, so this is a flag also, right? You can see boom, 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 a flag, right? So it could be viewed differently. It could be viewed multiple ways. Okay, this is pretty much like a bearish flag. So with the flag, what happens is usually you have a big downtrend and then a push up in price and then a further break below. Okay, so for this, like, even though it's not a perfect cup and handle, you have to be aware that, you know, it also could be a flag, right? So it's not always just like, oh, I got a confirmation, this is a cup and handle, we're gonna go with that, it's nothing else, right? This could be a flag, it could be a cup and handle, it could be multiple kinds of things. So you have to be ready to switch your game up. So this could be a flag, it could be a cup and handle, right? Okay, remember that. You got to switch it up. You got to know when to switch. Okay, as long as something, as long as something doesn't, validate your points, you have to be ready to switch your momentum. All right. Just a little bit of feedback here. Is this webinar helping you guys out? Like, does it help you understand further on how you can spot these things and further? I don't know. Tell me if this is helping you out, because I would, I honestly enjoy doing these webinars, and I just hope that it's providing you guys value, because that's all I ask for. And also make sure if it is helping you, that you just take a second out of the day to smash the like button, because that's really important to me. The YouTube algorithm will go gaga if you do that. Okay, now these symmetrical positions, symmetrical triangles. Let me see if I can spot one. Not here. Let's see. Let's go back to the regular candles and let's go see a different stock. Maybe I don't know. Netflix. Let's see here. Now, the point I'm trying to make with the symmetrical triangles is that they can go either up or down. And I'm trying to find a scenario where I can show you this, but it's rather difficult sometimes because you're not exactly able to find a situation like that. So I have to look kind of hard here. Let's see. So this is a double bottom, right? This is a double bottom. You see that on a bigger time frame, you can spot these things. In fact, it's a triple bottom, quadruple bottom, right? This is a very big supply demand zone for Netflix, right? You can see that. This is your nice little ascending wedge, right? I really wish I can find a perfectly symmetrical triangle. If you guys know of any symmetrical triangles, let me know. Super helpful, thank you so much. No problem, absolutely. Burnt too much because of impatience. This game is 90% patience. Absolutely, I agree. This is great, T. Thank you, Jake. Appreciate that. Yes, awesome. This is a good webinar. Thanks for doing it. No problem, Bumblebee. Very helpful. Thank you. Appreciate that. Reading patterns feels like English language. So many rules that are seeking and seemingly easily broken by other rules. Yeah, that is pretty true, right? So yeah, I really hope that this webinar helps you guys out. But you know, now as I've mentioned before, there are really big things coming for this stream. Okay, I'm in the process of really ramping up a lot of great content for you guys. All right, specifically to help you out during trading hours. You know, spotting these things in trading hours are, you know, priceless. Okay, and I want to be able to bring that to you. All right, so keep watching the space because it's about to happen. All right, and are you talking about on a smaller time frame? In about a month from now, this stream is about to be in a very different place, and so I really hope that you guys will, you know, like it. Well, not really. This is more like an ascending pattern. Perfectly symmetrical triangles are difficult to find. Okay, the point is, and I'm having a tough time finding this right now. Oh, wait a minute. Nah, not really. Well, maybe. Okay, maybe. Here, maybe I found one. Okay, beyond meat on a 1 hour, right? For example. Okay. You can see it's kind of a symmetrical triangle here. Okay. So a symmetrical triangle is actually a very powerful pattern. Okay. Because there could be movement from either side. It could be a break on either side that causes, and you can see it usually is with a kind of a pattern where you know, this and this are perfectly aligned. Now you ignore the spillage sometimes above, right? Like some of you will ask me, why do you not draw it from here, right, to here, right? Well, sometimes it's about putting the best fit points together. Okay, it's the best fit points together. So this might be a anomaly, right? A quick buy up, a quick sell off, right? So you ignore those points sometimes. Okay, you got to know when to ignore them. Sometimes they don't fit your analysis. All right, and you see like all these down here, they quickly got sold off and then bought back up, right? Sold off and bought back up, and then it squeeze and squeeze and squeeze into the triangle. That's what you want to see with the symmetrical triangle. All right, now a break above usually sends this flying. A break below usually sends this down further. Okay, that's what you need to know about these symmetrical patterns. They can go either way. It's unlike the other patterns, which, like, if you have a bull flag looks like this, right? Okay, if you have a bull flag, it's usually going to have a continuation to the upside on the break. Okay, if you have a bear flag, it's going to have a continuation to the downside after a break, right? And then the wedges, right? Remember, the wedges are the descending and ascending kind of triangles, right? Oops, completely butchered that drawing. Like that, right? Or also like that. These usually will have a counterintuitive approach where one will either move further down, move further up, right? It's either down or up, okay? So you got to be able to understand those kinds of things with these patterns. Symmetrical triangles are actually my most favorite, right? These are also called pennants, okay? Thank you, can't wait for 10 October. Oh yes, that's right, I forgot to mention. For those of you that were waiting for the Everyday Growth Advisors mentorship course, don't forget, I just made an announcement today, yesterday, sorry. We're going to be holding wave number 10, I cannot believe it, wave number 10 of this course on the 10th of October, right? So this Saturday, if you've been watching this live stream for a while, you've been contemplating, you didn't know if you want to join and this and that. If you want to have a look at some of our testimonials, go have a look at our testimonial channel on Discord. Some really great testimonials came in the last few days. Maybe I'll just read one, the last one maybe. I just finished 5-day course, and all I can say is, wow, this course was everything I needed, and being able to watch recordings over as much as I like adds tons of value to the course. I have been studying and paper trading options for about 6 months, but this course did a good job connecting all the dots and allowing me to build my strategy. Also, the instruction on technical analysis is a game changer for me. T was an outstanding instructor with a wealth of experience to share to the class. Additionally, being able to attend his live trading sessions and seeing the class concepts and fundamental teachings in action was truly amazing. Those sessions alone, I believe, are worth the cost of the class. I couldn't be more satisfied with my purchase. I fully intend to sign up for the next intermediate series as well as becoming an option swing member moving forward. Well done. So that's, just one of the small things. Of course, we have countless number of these that come in, during the course, after the course, because, students really find value in the course. Now, just a little recap. I don't want to take too much time to announce this, but I'm not trying to sell a product that is, not worth it. All right. This course is 100% worth it because I don't believe in selling or doing something that will not bring absolute value to the people who buy it. All right. The course is a 5-day course, 3-hour live classes, 2 trading sessions with me applying everything that you learn. Okay. And sometimes I even add in another one just in case I feel like you guys need it. Everything's administered through the Discord and Option Swing. You get 2 weeks access to Option Swing, which is crazy value already. Okay. One of the best trading platforms that I know of. I've been a part of them for a long time. This is some of the testimonials. You can go have a look at it. This post is on my Instagram, so feel free to follow me, Everyday Growth Advisor. That's my Instagram handle. Now, the core values of this course are to build a systematic trading system using probability and statistics. This is not like your average YouTube guru kind of a scenario where, I'm teaching you about these patterns and telling you, oh, this is a support, this is a resistance, let's buy and sell here. No. This course is entirely relying on probability and statistics to make up your game, okay? People who have taken the course will be able to tell you so, all right? It's not one of those gimmicky courses where you're just watching somebody read off slides. I go through real-world examples. I go through real concepts that are applicable in real-time trading, and we take paper trades together, all right? Improving the odds of success through risk management, which is the #1 priority, capital preservation, and then fixing your psychological barriers. I'm not going to lie, the chances are your ego is going to be destroyed the first day. And then we'll spend the rest of the days building it back up, all right? And that's the beauty of this system. We go through a whole bunch of things in the curriculum. We do an intro to financial indices, why they're important, risk to reward, how do you view it, behavioral mistakes, what are the things you're doing wrong, technical analysis, how to plan and execute a trade. From my perspective, what is my trading system? I show it to you. Everything on the table, no secrets, all right? Then the second day, we go through different types of trades: scalps, day trades, swing trades, position trades, planning these trades. How do you plan entries and exits? Wave patterns, supply and demand zones. How do you spot them? Volume breakouts, etc., etc. The third day, we go into options trading. I teach you about options, not the stuff that you can find on YouTube and Investopedia and yada, 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 where you can watch a YouTube video and search all those things. These are things that you will not find on YouTube, all right? Not find it. I'm pretty sure that, people have mentioned this here. Let's see. I'm pretty sure people even mentioned this on the testimonials. I wanted to show you one of them. Okay, never mind. I'm not gonna bother looking for it right now. But just take my word for it that the stuff that you're learning on this thing is not possible to find on YouTube. All right, it's definitely impossible. All right. And then we go into fundamental analysis because we don't believe in just teaching you how to be a technical style trader. We want you to be a balanced trader. We want you to be able to value a business. I go through step by step. We pick 2 companies and we do it. All right. And then how to use option swing platform. All these classes are emailed to you daily for you to watch unlimited number of times. We have quizzes that will retain the knowledge as well. All right. $330 for non-option swing members and $250 for option swing members if you join before Saturday. Make sure that you DM me for 25% off if you are planning to join before Saturday, okay? DM me on Instagram, DM me on this, wherever, to get the 25% off so you can join and then take the $80 off, all right? So you get a double-double, all right? We will enroll on Saturday at 12 p.m. Eastern Time. So this Saturday, all right, 10:10 for Wave 10. We're going to be enrolling Wave 10 on 10:10, all right? So classes will be Monday through Friday that week, 12th to 16th October, okay? So keep a lookout for that. All right, I'm done with the announcement. Cool. Now, thank you. October 36th. Unfortunately, we're not doing ticker breakdowns today, guys. On webinar days, we don't do ticker breakdowns. I'm sorry. Yes, does BA have a triangle? I was trying to find it. Yeah, I mean, it does have a triangle. It's right here, right? We broke out, though. So expect BA to kind of run up here. I was in Wave 6. Worth it. Awesome. I'm glad that you were part of it. Thank you for being an alumni. I'll be in Wave soon. I hope to see you there, Jason. Cup and handle forming CHD. Let's have a look. Nah, this is not a cup and handle. Nah, this is not. This was a look. It was a kind of a flag, right? This is more like a flag. Well, actually, it's not even a flag at this point. This is just a weird pattern here, right? You have this. This is more like here, to be honest. Yeah, no, this is just a weird pattern. I'm not gonna try and figure this out right now. You gotta look at it a bit more carefully here. This is a weird setup here. Hey T, can you explain that no experience and first timers can take the course as well? Absolutely, yes, absolutely. You can, most definitely. If you do not have experience with the markets, this is the course for you. It's a comprehensive course. Yes, you will get overloaded, but the point is you will learn very quickly. Okay. And I think that learning quickly and having access to the recordings are important to get you online and up to speed. Okay. How do you explain why a stock move out $10 from option lost value from 650 to 416? Check the expiry of your stock, and if your option is far away, your option must be an out the money option, which means that it's not close to the money. So your strike price is going to be higher than your current stock price, and therefore your option is losing value because it has no intrinsic value and it's close to expiry. That's the reason why you're losing value on the trade. Okay then, I'm done for the webinar today. I don't want to further do this. On Thursday we're gonna do a webinar on how to use VWAP. Okay, VWAP, volume weighted average moving price, and we'll be going through that on Thursday. Tomorrow we'll do fundamental analysis of Salesforce to see where we're at with the valuation of that business. I hope to see you guys here. Once again, thank you for attending. Make sure you smash the like button one more time. Can we get to 70 likes? You think we can get 12 more likes here? You think you guys can smash the like button for me one last time? Come on, please. Let's get to 70 likes, right? If we can, it would be dope. All right, I would hope so. That we can. That would be dope. Let's see what the market's doing in the meantime. SPY with the nice little rally. I don't know if this is sustainable, but let's see. Double top, possible double top. Maybe sell off to the open. I'm not sure, but that would be my guess. Let's see here. 62. Can we get 8 more likes? Come on. I'm sure we can get 8 more likes. 7 more likes. Come on. I'm sure we can do it. We can do it, guys. 7 more likes, and then I'm gonna get off the stream. So a little bit of what's about to come in a month from now. I just want to talk about it so that you guys are aware. I've been talking about it for a couple of live streams now, but I'm going to do a quick little summary. Towards the end of this month, I want to say a little closer to the end of October, this stream is going to be changing a lot. I'm going to be upgrading a lot of equipment. I'm going to be buying, new streaming equipment, a desktop PC. I've been working from a, very terrible situation. My living situation hasn't been the worst because hasn't been the best because of how COVID has hit in a weird time, and I didn't have an apartment. I was living with my uncle and aunt for a while, and then things just started to break down, and they were giving me issues, and I had to leave. So now, finally got my own place. Gonna be having my own space. Gonna be having my own. I'm gonna set up like a studio. So that it's gonna be really nicely organized. Everything's gonna be great. I'm gonna get a desktop computer, multiple screens. And I intend to do what I've been talking about doing for a long time, which is starting a live trading stream. All right. So now this live trading stream is not going to be open to the public. All right. This live trading stream is only going to be available to EGA mentees. If you are a Everyday Growth Advisor mentee, you've been a part of the mentorship program, and you're an alumni, you will get first access to this live stream. All right, which means you get to trade with me, you get to get my market commentary, and you get to get my play-by-play, what I'm doing, what I'm taking throughout the day, how, if I'm planning to enter a scalp, how am I doing it, where's my entry, where's my exit. You see everything in real time, how I'm doing it, okay? And I want to do this because it's an educational process that extends through the mentorship course. All right. Chances are, if I were to open the floodgates to everybody and anybody, they wouldn't understand the system, and it would create a lot of friction during the sessions. And so, just a little bit of a insight into what is going to happen is, if you're a mentee and you're alumni of the EGA crew, you're going to be able to access this live stream in the future. All right. I haven't thought about what is going to be, you know, the structure of it and this and that, but once I get my computer and everything set up, then we'll do a couple of dry runs, and then we'll see how that goes. But that is the plan. All right. 69 likes. I'm pretty sure we can get one more like. Who is it going to be? Well, you know what? It's good enough for me. I thank you all for being here today. Have a great day. Trading session. Be safe. Do not overtrade. And I'll catch you guys tomorrow. So the people who are here, you heard what's coming up. I hope that you're as excited as me. But in the future, it's going to be crazy. This a month from now, this stream's going to be in a very different place. Okay, so by the way, nothing changes with the pre-market stream. That remains free and will always be free, and we'll still be holding webinars for free. All right, nothing changes there. This stream is not going to be like one of those things where like, oh, it's suddenly going to be like, oh, you now have to pay $1 billion to be here. No, this stream is always going to be free. The webinars are always going to be free. The only thing that changes is the live trading session, which is gonna be value for you. All right, so that's something that you are going to have to think about. Yes, being able to go over recordings allow me to go over, for example, level 2 data. Really good broken down. Thanks, T. No problem, Michael. Absolutely no problem at all. Alrighty then, thank you guys. Oh, we got to 70 likes. Thank you very much. You guys have a great day, and I'll see you guys tomorrow. Peace out, guys. Bye bye.